That's why we started Corazon Capital. Was we thought there was a need in the market for this firm that would build trust and give good advice. And if you can do those two things, I think you can earn a special relationship with founders.
Welcome to the Smart Venture Podcast. We're here to bring you the latest and greatest from the Silicon Valley, where unicorns roam and innovation never sleeps. We've got top investors, superstar founders, and well-known tech executives lined up to share their secrets on building and investing in successful companies. Just a quick disclaimer, while we may sound like financial geniuses, but please don't mistake us for your friendly neighborhood financial advisors. So let's get started and dive into the wild world of tech entrepreneurship. Hi, Sam. Thank you so much for coming on the Smart Venture Podcast today.
Hi, Grace. Thanks for having me.
You are such a legend. To give the audience a little bit of your background, you have started SparkNotes, OkCupid, and then you created the Techstar Chicago. Now you also work as a CEO of ShopRunner and Match Group. And you had a great childhood growing up in a suburb of Illinois. I went to U of I, so I feel like I'm kind of familiar with the suburb of Illinois. And then you went to a local public schools and then played basketball. And then you're a son of immigrant, which kind of help you shape you into who you are as an entrepreneur. To start the show, I would love for you to share one experience in your early on in your life that shaped you into who you are today.
Yeah, that's a great question. I think so much of deciding to start a company is dependent on your circumstances and where you are in life and where you are in the world and where you are in the history of the internet, if it's an internet startup. So I was very fortunate to be in college in the late 90s. And that was a very interesting time in the history of the internet. As you know, it was 1993, 94, 95 was when really the original first companies on the internet came to life. The Amazons, the eBays of the world, were very early. And in the early 90s, a bunch of the true pioneers of the internet were starting their companies. And by the time I was in college in the late 90s, it was 1999 when we started SparkNotes. It was really, in some ways, one of the easiest times to start a company. And we didn't really want to start a company. We were in fact, my co-founder, Chris, had been just really building his own personal web page and was just messing around with HTML. And, we were, kind of just playing around. And what was very interesting was so many things that we now take for granted on the internet had just not been built yet. And so I think of it a little bit as the foundational years where, or if you imagine when the pioneers were heading west in the United States, it was just a matter of going and plopping down on the land. You got credit just for going and for being the first person to cross the Mississippi River or whatever the case may be. And so I remember the moment. I remember exactly where we were sitting when we had the idea for SparkNotes, and it was that one of my partners looked at one of my co-founders had some Cliffs Notes up on his shelf, and one of my other co-founders was like, why don't we put Cliffs Notes online? And it was that simple. It was, and when we looked around and nobody had really done that yet. And so it was sort of ours to lose. We were like, okay, we know people want study guides. Cliffs Notes had proven product market fit for decades. Mm-hmm. And we knew that making them available for free online would be a strict improvement, right? Mm-hmm. If you're a college student, you don't want to go to the bookstore and pay $5 to get a Cliffs Notes and then have to read it. You want something that's searchable, available 24/7 and free. It was obvious. And so when we set out to build SparkNotes, we kind of did so out of just observing that it was needed. Whereas now I think people decide I want to be an entrepreneur as a career. Mm-hmm. That's very different from what the world was like in the late 90s. It was, and in fact, if you asked any of us at the time, do you think you'll ever start a second company? We would have said no, because that wasn't a thing that you thought about. You didn't think I'm going to be a serial entrepreneur. That wasn't even a phrase anyone had ever said. It was like, hey, we see an opportunity to build a company. Let's do it. So that's what took us into entrepreneurship in the late 90s.
Totally. I feel like you, since that, you have started multiple companies right after, you quote on yourself, you felt like you were still like unemployable because of you were like a 25 years old CEO, but like
Right.
nowadays, like, you have like started many successful companies. So like, I wonder, since like you mentioned your parents were immigrant, so it sounds like you were like not coming with like a lot of connections. I wonder, how do you build this network for yourself? And then like, how do you kind of like, who is on your personal board of advisors when it comes to career?
Yeah. So, in fact, I think one of the biggest things I would do differently about my time in college, nobody told me that school was supposed to be a networking event.
Thing.
Uh, I spent my years in college. I had a very close group of friends, friends that I'm still very close to today. But, I was at a very prestigious school with 1,600 people, and I probably only got to know a few dozen of them. And I would spend my Friday nights, I would be so exhausted by the end of the week. I would be like, I just want to hang out with like my handful of friends, get some food, watch a movie. I never thought I should go network and meet people for professional gain. I just thought I want to have some friends, and as long as I have enough friends, that's all I need to do. And in fact, later on in life, when I went to business school, I took the exact opposite approach. I said, it's my goal to meet every single person in my class. I want to go have coffee, have a meal with every single person. And so between even in just those 4 years from the time I graduated from college to the time I went to business school, I sort of learned how the world worked, and I realized that not having a network was a real problem and something I really wanted to fix about my own background for being a professional. So I would say, for people listening to the podcast, I think as early as possible, there's the old saying, your net worth is your network, or vice versa, your network is your net worth. And I think that's really true. It's like so much of the opportunity that I've had in my career has come from people who know me.
Mhm.
It's the people who know you best, who will take a chance on you, who will find you for opportunities. And you mentioned, that I've referred to myself as being unemployable, back in the day. And I think that's the flip side of that. Is I was unemployable not because I was an idiot, but because people couldn't. If you didn't know who I was, my background didn't fit into a box.
Mhm.
Right? I'd been a founding CEO of a company, and there's nobody who lists that on their, requirements for their job. And so people looked at my resume and said, "Oh, this guy's not for me." Right? And so, you asked about my personal board of directors. I think, over time, I have come to have the great fortune of working with and befriending some of the highest intelligence, highest integrity people I've ever met. And those are the people who I go to for advice in those sort of crucible moments. But they span, people who have known me for a long time, people I've worked with, people I haven't worked with, people who are newer to knowing me, because I think it's important to get perspective from all different sort of facets of your life.
Totally. I think I would argue with you that like I feel like your first part of your career when you were at Harvard, like when you built these like really close net relationship, that's like, kind of like make or break your career. Cause like early on, like, although you may like just like repetitively spending time with like the handful of people, I feel like that helps you with like building a better bond with them than, let's say, like in business school, maybe like let's say you meet someone for coffee, but like they don't really actually get to know you. Like maybe they know you exist, but like, I feel like maybe the closer net is like something that makes bigger impact.
I agree. I think you need both, though. I
Mhm.
think for sure the people who you're very close to, those are the people who are gonna vouch for you. Those are the people who are gonna really be your first calls when you're need something or want to bounce an idea off someone. However, I've been shocked at how often mere familiarity makes things a lot easier. So if we've met, we've spent time together, when we cross paths again, you start with such a benefit of the doubt, such a
Mhm.
positive bias versus, if you meet someone randomly for an interview or at a coffee shop, you don't know. This could be anyone, but just saying like, oh yeah, we had that one class in college together, like automatically, so much changes. We have even a very weak
Mhm.
connection can be very strong when compared to no connection.
Mhm.
So I do think, and again, just comparing my college and my business school experience, like I have so many more people at business school who at least I've had some connection with, and I've been
just shocked at how many times they've been able to count on me for something, or I've been able to count on them for something, because we had that common, even that weak common experience.
How would you build that if you did not went to business school, or like someone did not like, making themselves like be a part of the network?
Yeah, I think wherever you are, anytime you're surrounded by people who are having a similar experience to you, or that
Mhm.
are in a cohort, you're in a
Mhm.
common experience, I think really going out of your way to have a personal connection with them
Mhm.
outside of just whatever's happening for work, or for, if you're on a pickup basketball team, yeah, play the game, but go out for the drink after,
Mhm.
or whatever, and have it. In fact, there was somebody I used to play pickup basketball with in Manhattan 20 years ago, and we recently crossed paths again. And again, just that 5 minutes of, oh yeah, do you remember back when we played? And yeah, that was so fun. Like, even just that little bit of banter and common connection really makes that conversation and that meeting go much better. So even if you're a pretty junior person in marketing in a company, go out and talk to the engineers and talk to the people in other departments. Build those connections, because you just never know when they're gonna come back around.
Totally. So I wonder, so I have a really selfish question to ask. Like, I just had a 4-month-old, and then like I feel like you're super, thank you. I'm an immigrant, and then you're super driven. I wonder, like, how do you train your kids to be like driven? And then like what does your drive come from? Is that like proving yourself, or like or were you just like a really high IQ person? Like you just easily got into Harvard without like trying or whatever? Like how, I guess, like how do you kind of like shape yourself into like a really successful path?
I've never been the smartest person. It's not an IQ thing with me.
Mm.
I learned at an early age. I remember in my sophomore year in high school was the first time I learned very viscerally that I wasn't the smartest kid in the class, because I met my friend named Nick, and I was like, oh yeah, you're way smarter than I'll ever be. And so I learned early in life that my key to being successful wasn't just going to be I was going to outsmart everybody. I knew that I had to outwork people, out hustle, and I knew that I had to develop other skills, communication skills, work ethic, other ways to differentiate myself and to win, other than just relying on being the smartest person. In terms of drive, I do think that's, a big part of that comes from being in an immigrant family. I think there was, when you don't have very much of a safety net, you are constantly not paranoid, but you're constantly thinking about what can go wrong, and you're
Mhm.
thinking about, you're not in fear of that, and you're comfortable with it, but you also know that, you've got to work to prevent those things from happening. You've got to put everything you can into success, because failure probably impacts you in a different way from someone who's got a broad safety net. So that's not to say I wasn't comfortable failing. I grew up in a household where we always pushed ourselves, and that meant you weren't going to win everything that you set out to do. But one thing that, my mom, always instilled in me was that, like, laziness was like the biggest sin. Like, you always had to be working on something, doing something in motion. And honestly, I think it's one of the hardest skills to so I think it's one of the hardest attributes to pass down to your kids if you are growing up in a relatively comfortable environment. I think, in my house, we were not poor at all. My mom was a doctor, my dad was an engineer. We lived very comfortably, but there was constantly this, it was just the four of us in America. Like, there was no one else. And so we were always contributing to the household. We were always figuring out, how do we help mom and dad do whatever they're going to do. And my kids don't live that way, right? My kids, we are fortunate to have, a lot of comfort and a lot of, convenience in our life. And so I don't want to, like, threaten and put too much pressure on my kids either, but I want them to know that, like, my expectation is to work really hard and always be doing your best. And so I was very fortunate to grow up in an environment where that was both explicitly given to me from my parents, but also endogenously from my environment. right? And so I think the question for a lot of people is, how do you pass that along to your kids when that's not the situation they're growing up in?
Totally. I like really love the fact that you mentioned like, you outwork everybody. I feel like that kind of was the theme of like many successful people on our podcast. So like people always feel like really like they have like some self-doubt about like, maybe they're like insecure in a certain way about their ability to accomplish something, but they just outwork everybody because of that. So I kind of like feel like that was really admirable. And like, I feel like that's kind of like the common theme of like outworking and like actually trying your best on something. Since you're wearing your Corazon capital jacket, so I want to start with that. Can you share with us more about like why you started your fund? And then like, I feel like that's probably also linked to, you created the Accelerate Lab.
Sure. We can actually start with Accelerate Labs. Maybe that'll be easier. When I moved back to Chicago, which was my hometown, and I had spent a bunch of years on the coasts, I really wanted to contribute to the
Ecosystem.
startup ecosystem here. And when you're new to a community, you have a few choices of how are you going to engage with the community. You can sort of network, you can build relationships, and of course I did that. But a big part of how I always grew up was to just take action. To and again, this gets back to what we were talking about just a few minutes ago. It's like it was just do versus think. Okay? And I think that's a big part of like in my career. I've always, a lot of people like think through all their choices. They do a lot of, and I'm always like, well, let's just try it. Let's see what happens. And that was very much the mentality that got us starting our first company in 1999. When I got here, I realized, there are startups happening in different parts of the city, but there's no real ecosystem. There's no connectivity among the founders, the investors, the executives at the tech companies, whatever. And Y Combinator and Techstars had just launched. This is 2010, so it's 2009. This is very early in their growth. And I just asked a simple question, which is, why don't we have an accelerator here? And a bunch of people said, well, we don't have enough good companies. We don't have enough good mentors. We don't have enough capital. And a group of us, I was one of several that started this thing. And we said, well, let's just go do it. Like, sure, we might fail. We might not have enough of any of these things, but why not? Let's go do it. And so we just started emailing people. We said, hey, we're going to do this thing. We're going to we're going to give people some capital. We're going to rent an office. We didn't have an office yet, but we said, we're going to get one, and we're going to have mentors. We didn't know who the mentors would be, but we said, we're going to make them show up. We're going to get them. And so that was really what started. And I spent a summer while I was working at OkCupid. It was, sort of like my side hustle, building this thing called Accelerate Labs. And I just fell in love with working with founders. I got to sit in an office with 10 startup teams all around, and just the conversations that I had, the help I was able to offer, but also just the raw emotions that I got to feel every day from the founding teams was so special that I really said, okay, well, how can I do more of this? How can I scale this? And I never wanted to be a VC. That was never a goal, but I started having a lot of deal flow, and I started sharing that with some of my network. And my network said, hey, we'd love to can I give you money to invest? And at first I didn't want that. I said, I don't want to be a VC. I don't want to manage it. I don't want to have other people's money. But then I said, what really got me interested, I said, well, can we build a different kind of venture firm? Like, can we do this in a different way from sort of what everyone else does? And I think and there are other VCs who have been operators, that's definitely a growing segment of the market. But I think, what can I offer founders that is differentiated? And what I really came down to is, as an operator, as a founder, there are those moments in your journey when you don't know what to do, when it's dark, it's lonely, you have imposter syndrome, and you're like, is this the day I get found out that I don't know what I'm doing? And who do you call in those moments? Like, who do you call when you don't know what to do and you've got to do something? And what I remember is there were the two biggest attributes that I looked for was somebody that I trusted and somebody who I thought could give me good advice. Like, the quality of the advice matters and the level of trust really matters. And so we strove to build a firm where we would earn the right to be the founder's first call whenever something good, bad, scary, awesome happens in the business, and you need
I want to be at the top of your list of people when you're like, I just got this news and I want to think through it live with somebody. And that's what's so fulfilling, and over the years, as I've now worked with over 100 companies, you get those texts that just say, hey, do you have 5 minutes? And like, I always get excited when I get that text. I'm like, someone at the other end of the line has something really important. And I've been selected to be the person that helps them think through that. So that's why we started Corazon Capital. Was we thought there was a need in the market for this firm that would build trust and give good advice. And if you can do those two things, I think you can earn a special relationship with founders.
You started this lab when you were working at OkCupid, and then later on you went out to be like the CEO of Match Group, all that stuff. So I wonder, like, number one is like, as a founder, how do you structure your day to invest to build this early version of like Techstar Chicago? And like, number one is like, how do you leverage the time to build something like this? And then number two is like, do you get out of it with like something that like, you took away from the other founders to do your stuff? I'm not talking about like, oh, I'm going to go with this idea or anything. I'm just talking about like in general, like, does it benefit you to start like this network?
Yeah.
And then we'll go from there.
Yeah. So, I think in terms of how do I like manage my day, I guess what I would say is I think it gets back to, I think, like work ethic that we talked about before. Like I'm very fortunate to just have the capacity and the bandwidth to do a lot of things. I think I'm very efficient with my time. I work a lot, and I am really good at triaging things. What's the most important thing to be working on? What can someone else do that's not me? I think the hardest thing to balance, honestly, is the amount of time to spend having meeting with people that where there's no immediate outcome. Right? The investment in the network. Like a lot of times people will say, hey, a friend of mine is between jobs and he's looking to meet people. And you just want to like, man, I'm so busy. Or someone moves to Chicago and she's like, hey, someone said I should talk to you or whatever. And it's so easy in the moment to just be like, I'm just too busy right now. I'm sorry. But so that I think is the because it's very easy if you have one of your portfolio companies has a board meeting, you have to go to it. Like it's very easy. Like the stuff that you have to do is very easy to block into the calendar. You have to do it. It's how do you spend those discretionary hours? When do you get time to think? When do you get time to do your creative work? I think those are the things that I think harder, and that if you aren't good about and intentional about, can just keep slipping. In terms of the work with founders, I would say it's the number one way that I learn, because these founders, if you can build a relationship with the founders where they're really bringing you the most interesting problems, they're all problems you don't have answers to. Like if I had the answers, you could probably find the answer. So almost every time a founder calls me, it's something that's like, maybe I've seen something like it before, but there's a new twist on it. And I get to do real thinking. And the founder, it's not like the founder's an idiot. The founder has a lot of thoughts. In fact, usually the founder is like, hey, I've thought about 2 or 3 ways to really handle this. What do you think? And now I'm like, oh, I thought about that. Let's work through the unintended consequences and think through what are the, good, bad, or other. And so I think those conversations are where I learn the most. And honestly, in terms of like the network and like the most valuable thing for an investor, I think the most valuable reputation you can have isn't for being a good investor. It's for having founders who will tell other founders that this person was my most important, most trusted partner on my journey. And so that is what I spend a lot of time really making. I want to be able to send a new founder to any of the CEOs I've worked closely with over the years. And I want them to say, you got to work with Sam. And that's the goal. And so I think, I'm learning and I'm growing and building my reputation at the same time. And so I think, and if you're backing the right founders, I think that's amazing. That's the joy.
I have a question in terms of picking the founders, right? Me running my media company, and then like I've some experience, worked in venture and like private equity, and then like nowadays I have encountered just so many founders in my network. They all seem like geniuses. Like I have hard time to pick which founder to kind of like back with my tiny angel check. I'm not saying, I'm not you. I don't run like a $100 million fund. So
Yeah.
I wonder, okay, but my time is limited as a founder myself, as well as like just being overwhelmed by like how great these people are. Like they all seem like geniuses. So I wonder like how would you pick the company that you would spend time with? And since like, I'm not backing like, 80 company a year, like I'm backing like this, like I only have capacity for let's say 3 companies per year. How
Yeah.
would you go about picking which one at a very, very early stage?
Yeah, I think it depends. I think it depends why you're investing. I think if you're investing for primarily the financial return, you want to make money, which of course we all do when we invest, then I think, the quality of the founders is just one of many dynamics you're going to look at. And, you might take a strong signal from, the size of the market or the quality of the product, or maybe even who the other co-investors are, et cetera. You might have a certain thesis, in about AI or about whatever healthcare that you want to invest in because you think you have a vision, you have a view of where the market's going that maybe others don't. I think if what you're really doing, or if part of what you're doing is I want to build my reputation as an investor, then I think it really becomes, do I feel a connection with the founders, even if they're, you said they sound like geniuses. I've invested in geniuses who don't want to build any relationship with their investors. They look at their investors as sort of arm's length, I've taken your money, you own part of my company, and we have really just a transactional relationship.
Mm.
And I wouldn't work with someone like that if I were trying to build I would quite the opposite. I would say like, hey, yeah, I'm writing a small angel check, but like, I want to be important to you. I want to build a relationship with you. And I might be willing to be in a less, successful company where I had a better, closer relationship with founders, because that's where you're going to, grow your founder network. You're going to grow your deal flow. You're going to grow your reputation as an investor. So I think it's not quite as simple as, hey, if I've got 3 checks to write, how do I deploy them? I think you got to start by thinking, what am I trying to accomplish with these checks?
So I feel like venture to a degree is a numbers game, right? When I reflect, what I should do is like, let's just put like the tiniest amount of check into a billion companies. And I wonder, do you agree with that theory? Or like, do you feel like that's like a really terrible way to build up your network and build up a good portfolio?
My view on venture is, I think a lot of it depends on the market. Like I think when the market, 10 years ago, when the market, if you knew you were going to have a 10-year run of bull market, great valuations, then in some ways you want to have an index fund, basically. And so I think if you're now in 2014, we didn't know we were going to have, 8 years ahead of us. But if you believe that, look, the next decade is going to be great for startups and tech, then yeah, I think you can do that. I think you can sort of, hey, I want to get as much exposure as possible to the market because I believe that basically the index of startups will go up. My general view is that that's not the best way to invest as a venture capitalist. That there are funds that will basically say, if you have a lead investor from a certain caliber of funds, we're always in. Like, don't care, invest in anything. And my view is I really want to get to high conviction on every bet I make. I mean, we make lots of bets as a firm. We are one of the more active firms for I think our size, but we still hold the bar very high. And I think that's the key thing, is I think once you start getting in the business of being like, well, it's a small check, so it doesn't have to be very good. I think that's a slippery slope where you end up with a portfolio that you look back on and you're like, oh boy, I don't have anything I'm that excited about. Or when the markets get bad and each one of them starts emailing you being like, oh, we ran out of money, product's not that good, lost a customer, and all the sort of hard things start happening. And then you start wondering, wait, why did I invest in this thing again? So I think you've got to have high conviction. And especially if you're an early stage investor, angel investor, these companies take years to succeed. Years. There are 2 boards I'm on that are very successful companies. I've been on their boards for 12 and 13 years, respectively. Like,
I've been to weddings, I've like, I like, we're just, babies have been born, like all, and you're in this for a long time. And I think if you really, you have to, and I think that's an even bigger reason why you have to have high conviction.
When you were thinking about building a successful fund, like one part of it was, picking the superstars, like the Pinterest, SpotHero, or like Stellar, like in your portfolio. The other part is, I guess like overall portfolio construction, right? Like, you can't pick every deal that's going to become a Pinterest. And like, how do you like, make your bets? Like, do you do like, let's say 80% went into a core thesis and then like the other 20% into some like really risky high reward deals? Or like, how do you kind of like structure your portfolio? And for the superstar deals, so like a Pinterest or other companies, how do you kind of like get involved in early stage?
Yeah, so we're generalist investors, meaning we'll invest in a really broad array of companies, and we obviously have themes, but I would not say that we are thesis-driven investors.
Mm.
So, about 2/3 of our deals are consumer, about 1/3 are B2B. So we have a pretty broad perspective. In terms of portfolio construction, it's less about sector and more about stage. I think, we do pre-seed, seed, and A, and those, each of those has a different risk factor. And so if anything, we think about, do we have enough risk in our portfolio? Because remember, in a venture fund, you're really looking to hit home runs more than anything else. In private equities, maybe you're hitting doubles and triples more. But in venture, the way almost every great fund has the one or two or three companies that are, multi-billion dollar outcomes. And so depending on where you are in your funds and how your fund is doing, you may want to take more or less risk in your investments. So I think that's the biggest thing. And then I think the other important factor is once you've made an investment in a company, how do you think about following on in subsequent rounds in that company? And some firms never follow on, some firms always follow on, some firms look at each follow-on opportunity as a separate, distinct investment. And so I think that's really where portfolio construction gets really interesting for me, is more about stage and how concentrated we want to be in different companies.
What about like when you are investing in these like, big local companies, like how do you, I bet the round of like a Pinterest or something is really competitive. And how do you kind of like go about getting into these like popular deals?
I have found that the most important way is to build if to build a relationship with the founders. Like, and again, every fund is going to have a different strategy. If you are one of the big blue chip firms, you basically just say, I have a big name, and I'm going to give you credibility. If you some firms are notoriously they're price insensitive. They'll give you the best valuation, and that's how they win deals. They buy the deals. They overpay for the deals. Our play, and remember, we're investing so early that they're not global companies when we're investing in them. SpotHero was just in Chicago when we invested. They hadn't even gone to a second city yet. Now they're the leader in parking. But in that deal, I just became very close to the founders, and they realized that they wanted somebody close to the business that had built a business before, that had built scale before, and could help them hire executives, raise money, expand nationally. And so I think every investor has to think about what is the differentiator for my capital versus someone else's. And it's like anything else in a competitive market, it's just important to really make sure you know what your superpower is or your differentiator, and stick to it as much as possible.
Totally. Okay. So I wonder, so like when you see SpotHero, where like as you mentioned, they just enter like they, like they're just in Chicago. So I wonder like what do you see in them compared to their competitors? I bet you are doing a competitive analysis, like, and then there's like 4 companies that's in the space.
Yeah.
Like, how do you feel like this is the company that's going to win?
Well, when you're evaluating against competitors, it's really about the quality of the product, quality of the team, and then really the strategy. A lot of people they'll have a good product and they'll have a good team, and then they'll tell you what they want to do, what their plan is to go to market, or what their plan is for the product roadmap, or what the plan is for whatever. And then you realize, oh, that doesn't make any sense. You shouldn't do that. And one of my early mistakes as an investor is I used to think I could convince founders. I would say, oh, yeah, I know the deck says they're going to do X, Y, Z, but that's stupid. I'll convince them to do Z. And sometimes you can, and sometimes you get convinced that they're right and you're wrong. But going into a deal with the expectation that you're going to change it is like going into a relationship saying, oh, I'll fix him, I'll train him or whatever. And then you're like, oh yeah, no, why'd I do that? It doesn't make any sense. And so that's probably the biggest thing. In fact, we were looking at a deal very recently, and the founding team said they were going to do something. And I was like, oh, you have such a good idea. You're so close to what I think will be great, but you're doing this thing that I don't think is going to work. And I had that debate, and she was like very open, and she was like, yeah, well, I'm open to doing that. And I'm like, yeah, no, you're not. You're just saying that. Like, you're being polite. You're like, you're being respectful, but you don't agree with me. And that's fine. I mean, she's probably right. So I think that's another thing that you've got to really make sure the team can execute, that you like the product, you think the product is great, and that you think they have a good strategy to exploit the market opportunity.
Totally. I wonder, okay, so when it comes to like advising these companies, you have a lot of like really great track record, and then like one of them is OkCupid. Like, it sounds like it looks very fancy on the outside, like, you are the CEO of like this company that I have personally used before, love the product. And like, I wonder, like, how do you, like, because you mentioned like you guys were not growing at the rate that you loved, and like I wonder what went wrong there. Like, although I personally didn't really see anything wrong like of the product, but like I wonder, like, what would you do differently to execute on the idea of OkCupid?
Yeah, what's interesting about consumer products is if you're a user of the product, you often don't know whether it's growing or not, right? Like,
because I'm already using it, so
yeah, and like as long as it's serving your need, I don't know if it's growing or not. And so I think the product was never a problem for our users that we weren't growing. It was a problem for us and our investors that we weren't growing. We did two things at OkCupid that in retrospect we probably shouldn't have done. I think the first is, we weren't seeing enough growth in the United States, and so we decided to try to go global. And I just think, I remember making the decision with my partners, and I know why we did it. In retrospect, the idea that you're not growing in your home country but are going to grow in a different market, I think is very unlikely to be true. I get it if you're growing in your core market and you want to go internationally. That makes a ton of sense. But if you're not growing in your core market, and you're like, well, maybe if we go to Germany, then we'll figure it out. Anyway, so that was number one. Number two is we started launching new products that were under different brands as a way to say, like, well, if we can't get OkCupid to work, maybe there are other dating ideas in a sort of other approaches to the market that might be more successful. And again, I know why we did it, and we thought, oh, this will drive a lot of press, and it'll sort of be a new vector of customer acquisition and excitement. But again, if what you're trying to do is grow the core business, taking your attention and mind share and bandwidth and putting it on something else, that is going to have to get really big in order to like solve your growth problems in your core business. And so I think in retrospect, we probably did ourselves a little bit of a disservice by being so, by sort of taking our eye off the ball and not focusing as much on the core. So I would say expanding out of your market and sort of trying to innovate around the edges versus trying to innovate in the core are probably the two biggest mistakes we made.
Totally. So what would you do differently? Also, I know that like, later on you became the CEO of Match Group, and then through that time you guys did a lot of like amazing acquisitions, like, Tinder, Hinge, and all that. Like, so like on our show, we had the founder of Coffee Meets Bagel, CEO of Hinge, CPO of Tinder. I feel like that's your early journey in like acquiring companies or like being an investor in a way. So like, I guess like number one is like, what would you do differently with OkCupid? And then number two is like, what do you see in these other companies that like you feel like would kind of like make a great like investment for like Match Group?
That's a great question. In terms of what we were looking for, at Match Group, we had developed a expertise in certain things. We were very good at customer acquisition. We were very good at monetization. We were very good at analytics, right? And so one of the things we looked at is, but especially in the dating category, I think products are so idiosyncratic, meaning Plenty of Fish and OkCupid and Hinge are very different products. Match and Tinder and, Our Time are very different products. And so in some markets, maybe like the ride sharing market, you end up with products that are very similar. Uber and Lyft are very similar products, right? Whereas in dating, the end customer wants to date in different ways and wants to have show up differently in different contexts, just like we all show up differently at work and at bars and at sporting events and at the gym. And so what was interesting about the category was it would sometimes surprise me which products people liked. Like, why do people like Coffee Meets Bagel? Why do people want to get one email every day at noon or whatever the thing is? Like, why? But some people like that. They're like, oh, this is so easy. It's lovely. I get one thing, I can think about it, and then I can be done and move on, with my day. And so for us, what I always wanted to look for is I wanted to look for a product that was working really, really well, but maybe where they didn't have the marketing or the monetization or the analytics expertise, where we could bring our knowledge and we could work with the founder to grow that business, or with the founding team. So, we bought a company called Plenty of Fish when I was the CEO there, and we did that exact thing. Is we're like, oh great, we're gonna help do more customer acquisition, we're gonna help do more monetization, but you keep doing the product. You guys know the product better than we do. Tinder is something we incubated inside of Match, and I think one of the reasons it was one of the fastest companies ever to get to $1 billion of revenue was because the founding team really figured out the swiping and the double opt-in and the product. That was the team's genius. What we brought was knowing exactly how to monetize that thing and helping it grow so quickly as a business. And so that was always the sort of thing we were looking for in an acquisition was what can the team marrying the team's product expertise with our sort of marketing and monetization expertise, and how can we put those things together in a way that generates a lot of value for everybody?
Totally. So like Match Group owns like all these different products. Like, are they afraid of like competition? So if I I'm creating a dating app in like the space, and then like if I join Match Group, like wouldn't they share my data or like my secret to like all my competitors?
I don't think Match Group is afraid of competition. I think when you're the market leader,
No, I mean I don't mean Match Group, but like if I'm on like a Tinder or like if I'm a separate like dating company, and then like I join Match Group. Although like right now it's Match Group owns everything, but like I guess like when you join something, like would they be afraid of like your
we felt like we were part of the team. When we joined as OkCupid, we felt like we were part of the team and we were part of the like global leader in online dating. I think that feels awesome.
Okay, so we have a 1-minute fire round for you. So number one is, what's your favorite book?
The Count of Monte Cristo.
Who made the biggest impact in your career?
My co-founders of SparkNotes.
Who would you invite to your dinner party?
Depends.
Can you give us like some people? Or?
Depends on what the dinner party is. You got to match people. You got to match. I'm a matching guy. You got to bring the right people together for the right context.
Oh my God. Where can we find you outside of work?
Mostly with my family, with my kids.
What's your unfair advantage?
I think I'm willing to fail and willing to be wrong.
What's your content diet look like?
I'm a politics junkie, so I love Politico, Axios, New York Times. That's what I'm always reading.
Oh my God, that's really interesting. Are you running for office? I'm just kidding.
No, never.
Okay, Sam, thank you so much for taking the time to be on the show today.
Thank you so much. It was fun.
Thanks for tuning into Smart Venture Podcast. If you learned something from the episode or even just mildly tolerated me, please subscribe and leave a 5-star rating. I promise I will keep bringing you more successful, insightful interviews and insider tips about startups. Remember, sharing is caring. So tell your friends to listen too, or enemies, I won't judge. Until next time, keep venturing smartly.